Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues its upward momentum, testing the key area of 63 figure 30, which is where the 60-day simple moving average holds. Meanwhile, the US dollar, which measures the greenback strength against a basket of 6 major currencies, fell to 106.90 following the US producer price index rose by 0.4% in January, reinforcing expectations that the Fed will delay rate cuts until the year's second half. With only 25 base points seen for the year, the market now keeps an eye on next week's personal consumption expenditure, or the PCE, which with the figures from the CPI and the PPI suggest a potential softening number. In a separate report, US jobless claims fell by 7,000 to 213,000, signalling continued labour market strength. So looking at the technicals, we do keep an eye on this pattern here, as if we get a clearance of 63.30 from a New York close, could see further scope on towards the region of 63.80 to 64.5 and reassess from there. In light of how the market is portraying, I feel that any pullback will be limited, with support seen at 62.75. The euro also benefited on the weaker dollar and surges and clears the level of 104.4045, which now gives further room up towards 105 figure 20 and maybe onto 106. And like with the Australian dollar, the 4 consecutive strong candles will limit weakness, and with the support seen at 104.1020. Having taken the upward move, dollar yen comes into a bit of trouble as it got above 154 and reversed sharply and tumbled very heavily, and now has potential to see a further slide towards the region of 152.25 and maybe even back on track to its objective of 149.2060. Any advances should find this trend line around 154 as a cap. Turning to sterling, it is assessed that there could be a potential inverse head and shoulders pattern, and from there gives us a measured move, that is from the head to the neckline, and from the break now looks up towards potential target of 129. The trend is bullish when it comes to the daily aspect, and with a break over the midway point and also the MACD firming up as it clears the zero level, may find limited weakness and therefore support seen somewhere around 124.65, and as I mentioned, could see this rally continue. Wrapping up with commodities, market still eyes that topside target around $3,000 an ounce, and with the trends intact, even though we are seeing a bit of divergence here, but nevertheless demand is likely to continue. Given the fact by the bullish candles, the weakness is likely to be limited, and with support seen around 2,866 to 88. Let's see if it can take out the challenge of 45, 2,960 and on to 3,000. Wrapping up with oil, well, the rejection from the level, a key point at 69.6080, has posted close to a dragonfly doji, and from there could see further gains into today. With the market likely to clear the level of 71.6080, all eyes will look on towards 73.30, and a break there could even give further gains on towards 74 to 75. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday poll, and I hope you enjoy the great start to the new weekend.